for joining us. Before we get to our exclusive interview with Shain Urwin and Scott Harms from C2 Financial about the CRMP designation, I want to take a brief look at this recent column in CBS News, which asked the question, are reverse mortgages too risky in today's housing market? And here's what the experts have to say. So let's dive in, shall we? The first point is notable because with elevated mortgage rates and high home prices, older homeowners are not really keen on downsizing today. Instead, reverse mortgages, which allow you to turn your existing home equity into cash, can seem pretty tempting, and I would agree. June Liu, a branch manager with Churchill Mortgage, says that reverse mortgage demand is rising, driven by an aging population, strong home values, and seniors' preference to age in place rather than rely on care facilities or family. While the demand may be there, we're not seeing that directly correlate with HECM endorsement volumes in recent months. So what risks are unique to reverse mortgages that borrowers may face in today's market? We'll see what the experts have to say, but looking at the first one, it is not unique to reverse mortgages. It says you don't have to make monthly payments on a reverse mortgage. That is true for the principal and interest, but you do have some responsibilities to your lender. Namely, you must maintain your home, always have your home insurance policy up to date and premiums paid, and keep up on your property taxes. If you don't do one of these things, it's a serious issue that can lead to foreclosure, says Chuck Chika, founder of financial advisory firm Macro Money Concepts. Yes, that is true with any mortgage again. Unfortunately, all the costs are rising for homeowners, and it's making it difficult for them to stay current on what is owed for those property charges. Property taxes and homeowners insurance are not the only things that are increasing in price, so are the costs associated with home maintenance. According to the home service platform Thumbtack, they estimate that home maintenance costs are about $10,600 annually. So, how can reverse mortgage borrowers mitigate the risk of not being able to pay property charges? One way the column mentions is a lifetime expectancy set-aside, or a LESA. It's essentially a reserve account that holds funds from the loan to cover future property charges, says Lou. This ensures there is money left to keep the home in good standing and avoid a default. But what is not mentioned in the column is that a lifetime expectancy set-aside account can in fact run out of funds. And it could be for a number of reasons, but the most common would be if you're having higher and higher property taxes that are being drawn from that account, or homeowners insurance premiums that keep increasing that were not factored in the beginning, then that will prematurely drain the account. Or if the homeowner lives longer than their life expectancy was set at the time that the account was created. The column says another risk to consider is falling home prices. For example, in Austin, home prices have dropped about 5% year over year, and I believe that market will continue to see that. And that has a twofold impact on reverse mortgages. First, how much equity one may have access to would be reduced, and it may actually disqualify them if they don't have enough equity if the home prices are dropping in their area. Loan qualification definitely is an issue with higher interest rates that we have today. The 10-year constant maturity treasury has come down just slightly, but it's still much higher than it was during the pandemic years when we had quantitative easing and interest rates were dropped nearly to zero. But there is a silver lining for existing reverse mortgage borrowers who live in an area where home prices begin to drop modestly or even severely. And it's this: their benefits, that is their monthly payouts that they may be taking, or even their line of credit in the home equity conversion mortgage, will not be impacted. So that means they're actually able to secure some of their home's equity by simply getting a reverse mortgage, and those funds are not going to be taken away or reduced, unlike a HELOC, if you see home values begin to drop. Then, of course, there are the protections of the non-recourse, which means that you'll never owe more than what the home is worth and no other assets can be encumbered that would guarantee the loan. Another risk in any market, I would add, is that you may be passing on less to your heirs if you have a reverse mortgage. Thankfully, this column doesn't make the common mistake that many financial columnists do in assuming that the home doesn't even appreciate during the lifetime of the loan. That is not the case, of course, in most of the markets today and historically. The last risk is that the cost of the loan could outweigh the benefits, and that really depends on the individual. Again, we know that a reverse mortgage is not a suitable solution to a short-term problem. You want it to be part of a comprehensive and long-term plan or strategy in retirement. So if you're not going to be in the home for a number of years, that total annual loan cost would look very skewed. Chika notes that many reverse mortgages have a variable interest rate tied to market indices. In a high inflation environment, that rate can increase on a reverse mortgage. For your convenience, we provided a link just below this video frame for you to read the entirety of the column, but in the end, I would say that there is no unique risk to reverse mortgages in today's housing market. In fact, I think it's just the opposite. Those who are thinking and seriously considering getting a HECM or a proprietary reverse mortgage may be waiting too long if home values are falling in their particular state or region. Here's CBS News' bottom line, and I'll give you mine as well. And I believe that there are no unique risks in getting a reverse mortgage in today's housing market. I actually believe it's the opposite. For example, a homeowner who has been seriously considering getting the loan but just continues to wait and wait could see their home values drop significantly, and that could make all the difference between qualifying or not, and of course, on how beneficial the loan proceeds would be and how long they would be able to access them. Gentlemen, good to have you. Thank you so much.
Thank you.
There's been a lot of talk about the CRMP, and I figured who better than you two gentlemen to kind of fill in the blanks on the CRMP designation. So to begin, what really motivated you to even get the designation in the first place?
I was self-taught. I did not have a mentor when I got into this business, which, by the way, I do not recommend. It's hard to learn on your own, so go out and find a mentor. But as I reached a certain level of competence, I could see that the CRMP was an official stamp endorsing that level of competence and would really project that competence to my clients.
Shain, what have you seen any change with the CRMP designation when you approach borrowers or financial advisors, other area professionals?
You know, I can't say that it isn't with the average Joe public client. They don't know what the CRMP designation means. So I would say no there. Has it helped me when I'm talking to a group of people or getting in to giving presentations like I do? For sure. And people do ask often, what is CRMP? Definitely the financial advising realm. I'm also an RSSA, registered Social Security analyst, and went through that process. To become a CRMP, my motivation was Scott Harms. I mean, he really gave me a lot of insight of what it meant and what NERMLA did for the industry. For me, it wasn't getting it so that I could impact a bunch of financial advisors or clients and get them to say, this guy is a CRMP. I think the Certified Reverse Mortgage Professional designation allows people to say this person takes this much more seriously than just a run-of-the-mill loan officer. That said, the advisors that you meet with, they're used to having a bunch of letters behind their name.
Yep.
CFP, RICP, we go on and on. And heck, I don't know what half those mean, and the public doesn't know what half it means, but they do know that letters behind your name mean something. And
right.
So I think overall, having letters behind your name gives you some of that stigma or clout, but I wouldn't suggest somebody go down the route for that motivation. Instead, the true learning in having to pass this test and go through this process is valuable. I learned more about reverse mortgages and studying for that test than I thought I would. And I thought I'd closed hundreds and hundreds of reverse mortgages before becoming a CRMP. I thought, what is this going to do for me? I know loans, and I know a lot of CRMPs, no offense if you're one out there, I know some that don't close that many loans, even though they're a CRMP. And I thought, well, my mindset was shifted wrong. And then I changed and thought, well, let's go this route. I wanted to honor Scott. I wanted to understand the CRMP designation and learn one more. And the studying of it, my epiphany was I didn't know a lot.
One thing I'd like to add to that, Shannon, is when you're a reverse mortgage expert, and I say this to our loan officers all the time, you're a very special individual, because think of everybody in your sphere of influence. How many of the people in your sphere know a number of realtors, a number of loan officers, but they know one reverse mortgage specialist, and that's you. And so then if you could add to that by putting the CRMP designation behind your name, you're one of 220 nationwide. It is rare air. Think of it. For CFPs, there are 13,000 CFPs in the country. There's 211 CRMPs. So really an opportunity to make yourself stand out. One thing I find is that in the rare occasions where I have competition on a transaction, I really have no competition. And partly it is the designation itself and when I explain what it means, but it goes beyond that to what Shain was talking about. Getting the designation takes you to such a high level of knowledge for the whole industry, not just originating, processing, closing, but servicing and services for the client. Very impactful.
Interesting. So, Scott, for you, from a leadership perspective, how do you see the CRMP impacting the credibility of our industry overall? You see it as a net bonus?
I think it's great, and especially because, as Shain has alluded, it's not a rubber stamp designation. The test nationwide has a 25% pass rate. It's very hard. Now at C2, we have a program that I've built up over the last 10 years where we have nearly 100% pass rate on it. And it's a step-by-step process. I'll share a few of those steps today, but I think it's very important. For instance, for me, it elevated me to being asked to be on the NRMLA board of directors. Well, that combination of having the CRMP, being an originator, being a manager on a national basis for a major broker, and being on the NRMLA board is amazing perspective to have in the industry. And it all started by being a CRMP.
Shain, what are your thoughts on the CRMP and maybe the future impact of that designation in our industry?
Well, I look at NRMLA as a whole. The National Reverse Mortgage Lenders Association is the only true lobbyist group we have in our industry that's there fighting on our behalf. And I look at this designation that is, something they oversee, and it's through NRMLA. It's what Scott just said. It's the partnership of those two things together. I came from another company that didn't, they weren't part of NRMLA, and then they definitely didn't care about the CRMP. They talked down to it, if you will. And I think there was some preconceived notions that I brought with me from that when I came to C2. And C2 has over 10% of all the CRMPs in the country because of Scott Harms and what he's done and being on the board and being a proponent of the CRMP. So for me, I was slighted, and then seeing and learning from other CRMPs and learning what it means and what you learn and the camaraderie that CRMPs have nationwide. You mentioned at the start of this that we're nationwide. Technically, we're not. We're only in 40 states. And one day maybe we'll be in the all 50. But
there you go.
I just sent a loan to a CRMP in North Carolina because we're not able to do reverse mortgages there. And I was able to get that loan out to somebody. And that's important to me, to have a CRMP that's working on that, somebody that knows this level of the details needed to do a reverse mortgage properly. There's lots of loan officers out there that can get a reverse mortgage done. That doesn't mean they know exactly what they're doing. And so I watch your program I get your emails every day. I watch HECMWorld. I'm constantly watching what you're doing, Shannon. I think you guys are awesome. Reverse focus, everything you guys are a part of is top notch. And I always watch these for takeaways. So if you're one of the people like me, what's a takeaway? The takeaway on today is you should consider becoming a CRMP. You should consider getting a part of NRMLA if you're not. And if your company is poo-pooed NRMLA, well, I'm not going to call company names, even though I want to. If they have, consider getting involved on your own, because we need each other. There's a saying that says, for evil to prevail, all it takes is good men to do nothing. And so that's my take on being a part of NRMLA, become a CRMP. I think we need good men and women that are interested in helping others, linking arms side by side, and help.
I think one thing Shain hit on that is the camaraderie within the community of CRMPs. Every month we have a Zoom call for an hour. CRMPs from all over the country are on it. At all the NRMLA meetings, there's a CRMP luncheon. And so I've been going to NRMLA national meetings for about 12 years now. And when I get a referral for someone that's out of state or outside the C2 footprint, I'll go into the roster of CRMPs on the NRMLA website, find somebody I know personally that's a CRMP, refer the deal over to them. We know they're set. And I've gotten referrals from other CRMPs out of California because I only originate in California. Very powerful. Great club to be a member of.
If I wanted to get a CRMP designation, where do I start? It seems a little daunting for some, depending, I guess, where you're originating.
Well, I'll jump in there. What you want to do is go to the NRMLA website, which is nrmlaonline.org, and enter in the search CRMP. And then go down, and this is really interesting. I've taken a lot of tests in my career, but it's the only test I've ever taken that has an exam blueprint. Print out the exam blueprint, and it tells you what topics are in the test, how they're weighted, and what percentage of the test they are. And so look at those, figure out where you think you're weak, where you think you're strong, and concentrate on the areas of weakness. Not to promote any specific lenders, but two particular sources are really good. One is Liberty has a HECM underwriting guideline that's about 55 pages long. Talk to your Liberty PHH rep and ask for a copy of that. Print it out, read it thoroughly, dog-ear it, highlight it. It has the most relevant information I've seen in any one place to the test. The other thing is then go to the Finance America Reverse HECM underwriting guidelines, or you can go to Mutual of Omaha. But you want to be on one of the major lenders that doesn't have a bunch of overlays, that has their HECM underwriting guidelines, table of contents that are hyperlinked to specific topics. And again, go from that exam blueprint, your areas of focus, in the table of contents. Be in good shape. And what I recommend, it's a 4 to 6 week study period. It's not 6 months. Go through the HECM candidate handbook, get everything set up, get your test date set for 6 weeks out, dive into the book.
Follow up to that too. Study and really learn about processing and servicing. Stuff that those loan officers don't really pay attention that much to, because the processor does processor stuff, and servicing, once the loan's handed off. I have a saying I tell every one of my clients, and it's really, really important now that I know more about servicing, and being that there's only two major servicers, right? We have C-Link and PHH at the current time of shooting this. There's sub-servicers, obviously, for others as well, but those C-Link and PHH service for everyone. I always tell my clients, I'm in your life forever if you'll have me. And so I want them to stay in touch with me, talk to me, not necessarily go to the servicer. So learning more about what servicing does and the process of studying for the CRMP made me a better loan officer and better for my clients to stay in communication with them. So if you're going to pass this test, you better know those sections, and that's important.
So I have heard this rumor that there's an 8-hour class related to CRMP. Can one of you gentlemen enlighten us?
Sure, and Shain and I actually developed part of the class for NRMLA and instructed as well. And it's an 8-hour SAFE course, which is the NMLS continuing ed course. It's on 4 hours on Wednesday, 4 hours on Friday, online. Pacific time, it's 9 to 1 both days. The real advantage of this is if you're a loan officer and you have to have an NMLS endorsement, you're going to have to take 8 hours of really boring stuff.
Yep.
But this course has...
So take our boring stuff.
This course has 5 of the 8 hours are specifically on reverse mortgages written by CRMPs, NRMLA's member reverse mortgage experts. And Shain and I have no financial interest in this course. It's just for the betterment of the industry. And the next courses this month are September 17th and 19th. Go to nrmlaonline.org, put SAFE course, SAFE, in the search bar. Information will come up. Then again, it's going to be on October 15th and 17th, November 19th and 21st, and December 10th and 12th. So you have 4 more chances to knock out your NMLS CE credits. And if you're in California, that's all the credits you need. For some other states have additional credits you might need. The NRMLA vendor, loan officer school, uploads your credits to NMLS, and then you'll just get a notice from NMLS that you're all set for the year. It's
nice.
Really simple.
That's excellent. I'm going to include those links in the show notes. So for those of you watching, just look right below, and you'll find links to those courses as well. So, well, gentlemen, any closing thoughts before we go? It's been a real pleasure to have you.
Yeah, I'd give one more, and shout out to Jim Corey, who wrote a good chunk of the class, that CE class, and others involved as well. But me and Scott are on that NRMLA education committee that helped build that 8-hour class, like he said. But that was another benefit of becoming a CRMP. I would have never thought there's other committees and things to get into that can help this industry. So my shout out would say, hey, if you watch this far into today's program, click the links, reach out to Scott or I'd glad to talk to anybody about becoming a CRMP. I don't care what company you're at. This is not an endorsement for C2, and we don't get paid by NRMLA. We don't have any agenda outside. I'd like to see more of us link arms together and help change this industry and make a reverse mortgage a much more popular option for loan officers and clients to choose from. Because I don't think the problem is with the public. I think the problem starts with taking the plank out of our own eye before we take the speck out of our brother's eye. Our loan officers nationwide, and I'm talking just period loan officers, mortgage, reverse mortgage, doesn't matter. We don't understand reverse mortgages at a high level. And this is a step in the right direction. NRMLA is there to help teach anybody that wants to learn what a reverse mortgage is all about.
Excellent. Well, thanks again for coming on HECMWorld Weekly. It's good to have you on the podcast. We'll have you back at some point in the future. In the meantime, I'd like to see both of you gentlemen in Minneapolis, NRMLA National Meeting. Thank you.
Thanks, Shannon.